Hello, everyone. Happy CPI Wednesday. How's everyone doing? Good morning, McRangers. Good morning, Sterling. Good morning, Roe. Good morning, John. Good morning, Patrick. Good morning, Heinrich. Did see that the rate cuts? They're only pricing in potentially one rate cut now for September, and this is one of the reasons why. Thank you for putting that in there. The headline numbers were better, but super core is sticky. Super core bouncing up, and super core excludes things like housing, energy, but that's the one that's staying sticky. And that's why I think potentially if they cut too quickly, we could get into stagflation. I don't think they're going to avoid a recession, but if you have inflation get too sticky with certain things, it can get interesting. So thank you for putting that in. I was going to mention that, but since Sterling already got it in here, no need for me. That's a good thing. Let's see. Yeah, this was interesting too. Owner's equivalent rent. Can we, you know what? They should have just based it completely on home prices. Just use the National Home Price Index. I'm tired of this owner's equivalent rent. What a joke. All right. Uh, that's just a joke. And you're excluding things like insurance from, you know what? Insurance is going through the roof for people. But doesn't seem to matter what I think. Good morning, Royal Palms. I'll put that up there twice. Good morning, Anissa. Hey, Richard. All right. So let's just review the numbers. Core inflation month over month coming in at 0.2 versus 0.3. Expected down, or prior was 0.1. Year over year coming in at 3.2 versus 3.3 prior. Month over month coming in at 0.2 versus prior was minus 0.1, and year over year is 2.9 versus 3. So overall, I mean, it's slightly better than expected, but this is why that 50 basis point has to come off the table anyways. And not everybody calling for emergency rate cuts. The market just keeps marching back, and there's no fear in this market at all anymore. Everybody I'm talking to is like, yeah, just another dip, buy it, buy it, buy it. Even though earnings aren't fantastic, you know, the PE ratio, Schiller PE back above 35. The market not cheap, but doesn't matter. We're going to have some kind of soft landing miracle. So we got to trade what is. Yeah, I agree. Don't forget to hit the like. Explain to our viewers that the home equivalent rent is just what people think they can rent their homes for. Yeah, it's unbelievable. It's not. All right. You know, and when houses were marching up there, people were underestimating it, and now they're gonna, as housing prices level out, people are going to overestimate it. Just like everybody thinks their houses around here are worth over $1 million. Like most of the old North Scottsdale, North Phoenix, Cave Creek area, everybody's property is well over $1 million. You know what's stupid? Here's what's stupid. You know, mortgage rates dropped a little, okay, because the 10 years dropped. So a bunch of new listings came on the market and even more absurd valuations. You know, you see mortgage rates drop a bit, so you're even pricing your home 10% higher, and all these other homes still aren't selling. It's absurd. It's absurd. But so don't owner's equivalent rent is another thing that's absurd. And please, why do we exclude insurance? Why? Why? Isn't that a core thing? Last time I checked, you have to have home insurance unless you own your home outright. And then I still think you're foolish, like all these people foregoing home insurance because they own their home in Florida. That's going to end well. I guess if you're worth so much money that you can just say, I'll rebuild it on my own, that's fine. But for most people, you lose your home. It's a pretty big financial hit. Do you see also Florida main insurer, it projects that their insurance prices are going to go up 94% again next year? Wow. My auto insurance just went up for another 6% with with no claims for at least 15 years. Yeah, it's absurd. It's absurd. Ours has gone up over 90% in the last 9 months with no claims. And we've switched companies to get it down to just that much. So, but let's just exclude that. Let's just exclude that because you know what? People, that's fine. People don't need that. They don't really want to measure inflation correctly because, and this is where owner's equivalent rent around here, they should just measure the CPI. You had homes selling for 2019. Home was selling for 500,000. All right, that same home now back up listed 1.4 million with no changes. No, not like a gut rehab or anything else. That's, you know what? Was that captured properly at owner's equivalent rent? No. Nope. But it doesn't matter. EIA numbers up for 10:30 Eastern, but that's really about it. That is really about it. So that's where we sit there. We got Nvidia still marching higher. Look at, I didn't see anything out of Micron, up almost 3%. Google pulling back again against the news with Google. You know, their monopolistic practices with their search engines. Lowe's down 3%. Remember, Home Depot also had the earnings yesterday. Your groups, let me just refresh this. You got comm services down with mainly by Google, but you got technology, consumer cyclical, and financial. Still marching higher. No fear back in the market. No fear. Again, on the retail people I talk to, everybody's like, this is a no-brainer. We're back to the no-brainer. No-brainer trade. So why? Remember, we can still close above these 62.5 levels and put us in double top territory, but it needs to close above that 62.5 still. Only now we're up to 58.5 for only one rate cut. And fear and greed, hopefully we're finally going to pop out of extreme fear. But with this snapback rally, we still haven't really popped out of it. And the breath is still not good. Oh, boy. So, oh well. Oh well. Cisco after the close today. What else do we have? What else do we have? Tomorrow we have Walmart. Keep an eye on Walmart. That'll also be very interesting to see what their forward guidance is. So Cisco after the close, Walmart before the open. Where do we sit? In fairness, Rich's insurance probably went up because of the Lambo he bought at the back of his futures profit. Oh boy. Well, we're not using our trading profits to buy Lambos. That's not this kind of channel. Buying the Lambo. Oh boy. Car insurance inflation, thank you, 18.6%. Transportation inflation, 8.8%. I am not happy with my scalping trading on a tick chart. What would you trade on intraday using your percent B? I don't trade on a tick chart. I suggest most traders wait for key setups in zones from your longer term charts. And then, you know, I'm telling you, trying to scalp is causes people to overtrade. You're better to wait for stuff like even 4-hour percent beat buys, daily percent beat buys, and then trade in the direction of the trend as long as you're with the rotation zone. Now, for example, would I be aggressive to the upside today? No, not. I mean, we have to get back above 54.95, and we're in a potential rollover zone here. Yesterday was fine to be a little more aggressive after PPI. You know, it just marched higher. Yesterday was one of those marching days. Today, we're running out of a bit of steam. We got daily cycles at the top. Now, what I'm keeping an eye on, bigger term, I believe this percent beat buy will trigger this week. So even if we roll over and like have a little pause next week, we could easily return, especially if we close above this 54.95 area. We could easily return over the next 2 to 3 weeks with daily cycles now getting to the bottom area. Dailies, weeklies getting to the bottom area with dailies looking to roll over, so we can get a pause slash pullback here. But as long as it doesn't collapse out of here, we then could be looking to make another push higher to retest the high areas going into September. Okay? The only thing that will change that outlook is that over the next couple days, we have a massive collapse. But it's not looking that way from sentiment. It would take something out of the blue to hit that, or, I mean, retail sales can come in worse than expected tomorrow and you could pull back. But I mean, the key level on the pullback right now that would shift me back, the only thing that can shift me back in the short term to being bearish for more of a pullback, or at least a retest of the lows, is if it drops below 52.52, again on a closing basis. But it's done enough push that even on a pullback right now, there's some pretty strong support. There's pretty strong support now back at the 53.70 area. Coco, hey, confused CPI. Oh, car repair inflation. Didn't see that one. 4.6. Sterling with all the rent inflation, 5.1. What else do we have? Electricity inflation. You don't need electricity. Sorry, no Lambos, but camel covered Humvees. Is that the new? How about the new plug-in, the new electric Hummer? Maybe he bought an electric Hummer. Oh boy. Yeah, I've seen that one. Food away from home, 4.1. This at NASDAQ Pete price action is a washing machine. It's that the shorter term has been pretty challenging. Yesterday was a really nice day, just in terms of a trend day. Do not overtrade this market. Now, in the NASDAQ, we're at that 50%. This again, we've entered the major rollover zone. Okay, with daily cycles at the top. So I'm watching for at least a pause coming in here. Could we continue to rally today? Yeah. But I'm on high alert for at least a pause slash consolidation. The next thing to tip the NASDAQ higher to potentially retest the highs is 19,621. Also, it looks like this percent B is going to trigger. The only thing that shifts me back to negative at this point is the close back. Just remember 18K. Doubt we'll see that unless something really major happens. Also, rally enough off this. This could put us in potential major double top territory. Or if we don't get that high, it may put head and shoulders. We'll see. Keeping an eye on those things longer term, especially going into mid to end of September and October. But we're getting ahead of ourselves. It's all about the 180-degree rotating G-Wagon. The G-Wagons, the Mercedes. Let's see. All right, that's enough good news from Sterling. Dow, still, we had the trigger on the little double pullback. Next key, the major key area I'm watching is this 40,150. All right, the Dow to shift the probabilities, then has to follow through with a close of a 40,500. Again, daily cycles at the top, weekly cycles still getting to the bottom. This is just stair-stepping higher. The Dow could also be, it's got a close above last week's high. The high being 39,770. So that's potentially in that zone to trigger the percent B buy. Remember, I'm watching on all these things for the percent B buys to trigger, and then with follow-throughs above the 62.5 retracement levels. Because then the targets become the upper harmonics. Russell still can't get traction at all. Okay, Russell is just, this is really just a flagging pattern. So at this point, what I'm watching to do also now is this to rebound the QQQ IWM, the Russell NASDAQ ratio, to rebound a bit more before the next big rollover play. So I'm keeping a strong eye on this bouncing higher for a little longer before the next rollover play in that, where that's, if it's short both, the NASDAQ can potentially drop more than the Russell. So that's what I'm going to keep an eye on, but not yet. Remember, even on these pair trade ratios, they don't go in a straight line. They move back and forth. So don't jump the gun. VIX. See, VIX all the way back down below the little peak in April, below the peak last October, all the way back down. So again, the fear has evaporated from we need emergency 75 basis cuts to hey, we're going to all new time highs. See, that's a schizophrenic market, Pete. You know what? The DAX, I'm going to be watching today again, 17,950 on a closing basis. Could pop a little more, but I'm still focused on a rollover play on the DAX. The notes spiking up just shy of the 62.5. It's easier to see on the yield. The yield's been better. The yield's coming down to that 62.5 and moving up just a bit. I think this is reacting to that supercore stuff. It's getting there's some aspects of this inflation that's a little sticky, which is really what I'm worried about. But there's not much to talk about there. I'm going to keep an eye for another rollover in there. The 10-2s, we're trading right around that zero area still, -5 basis points. But still watching for this to continue to head up, but just not yet. Needs to pull back and consolidate a little more from my perspective. Dollar index broke down yesterday from the flagging channel. The only thing now being in potential double bottom territory, hitting that 87.5, is if it were to trigger the double. Okay, that's the only thing that changes it in the short term, but that's a long way out from happening. Other than that, it's still dollar continued pullback. We've only hit the first target a couple times. Still got lower price action. And remember, we also closed below 62.5. And everything's still lining up for potential dollar to return to 101. Crude, we got the little pullback yesterday, and now basing. Basing at prior resistance becoming support after close above the 62.5. So I'll be watching for potential breakout plays higher. Okay. You know, so that's, especially if it starts getting above 79 again. Unless there's a pullback play. Let's see. Nothing yet here. Let's just get to gold. Gold after the CPI pulling back. This has just been stair-stepping higher. Daily cycles turning back down. So going to be watching for a little pullback. Long term, it's still in bullish. Short term, there aren't any great trades now. Unless, if you're going to make an error, I'd err on the side of trading with the longer term trend. But the price action has not been fantastic in gold. Silver, still watching for another rollover due to the probabilities with the double. What else we have? Yen. Really keep an eye on the yen if it can get above 147.80. For a little potential breakout play higher. Not trading advice. It's something I'm watching. Euro. On its way. Remember, it closed above the 62.5, tested 75, now breaking through that 75. The magnet price is a little 110.72, up to retest the highs from last December. Bitcoin, not much. Not much to talk about yet with the good old Bitcoin, unless we break down below the lows from Sunday, Sunday 11th. August Sunday 11th. That did not make sense. 57,650 area. Did I say that right? Yeah, 57. Ooh, I'm having trouble talking today. Ethereum, still watching for rollovers here. Although there's pretty much so much stuff's trading in lockstep that if the NASDAQ continues to rally, can watch for continued pullbacks in that. The spiders in the rollover zone too. Remember the key level for the spiders is roughly this 544.50 on a closing basis. And it's going to fill the gap today. The gap left behind. All right, so that's still the magnet price. That 543.01, we're trading just above that on the open. The price to really shift it, where even if we get a pullback, the probability should say higher, is above that 544.50 area. And then the key support's turning into 537.50. The Qs hitting that 50% level, filling the gap magnet price. The next key thing is 473.49 on a closing basis. Still watching again for a pause pullback at some point. And then that 473.49. NVIDIA continues to march back higher. Remember, finished the double. It did close below 62.5, but this keeps marching higher. So there's no rollover play yet. The only thing that shifts me from not watching for rollover plays to watching for a retest of the highs is a close above 121.98. We're not there yet, but it could happen today because it's buy everything. So this could get interesting too. I'm keeping an eye on this. We're not there yet. But this is another case where NVIDIA, if it marches up higher and we get above 128.24, it is potential double top territory on a weekly basis again. Might not ever trigger. I'm also keeping an eye if we stall up before then and roll over, it's head and shoulders territory with waning momentum. So do remember, it's really where NVIDIA goes, the market's going to go. And NVIDIA's got earnings coming up at the end of August. So could it still see some upward price action for another couple weeks? Yes. Take a look at coin on a weekly. It could. I'd be real careful with that one though, because it's slamming into overhead resistance. So I don't know if I could get proper reward to risk based off that. Because for me, the stop would have to be all the way down below the lows from last week. And it's the price targets, even if you're going for something at the 50%, you're heading into a ton of resistance. So this is this could trigger, but it might not be a trade. This is one that could be a trigger without a trade for me. And here's what I'm talking about. So remember, a trigger does not mean a trade. This would not be the first thing. If I had, like, let's say I was looking at 10 different %B triggers on stocks. This would be one that would be probably just because of pure reward to risk. You got the breakdown zone. You got the hooking over rotation zone. And even the 50%, which we've had a pretty strong market this week, and it hasn't even eked out the %B. Reward to risk, my upside, 222.49, and my downside, I'd have to keep the stop at least below last week's low. Even on a more aggressive basis, and look at all this resistance right here. Even on a more aggressive basis, if you're trying to eke out a tighter stop, look, I couldn't have it high. I couldn't have it above 176. So let's just say you're entering right around, this 202 area. Stop at 176. What's that? 26. $26 of risk. And the first profit target's roughly 20 higher. And that's being aggressive with the profit target. Wouldn't work out from a reward to risk standpoint at all. So, again, you could have a trigger, but it would not be a trade from my perspective. I want everybody to start thinking that way, no matter what setups you use. Make sure you're structuring your reward to risk before you get into the trade. Because if you can't, using realistic stops and targets, not because you want to put on a trade, but a realistic stop and target. Because many times that will prevent the trade. And I don't care if it works out being a winner. If you couldn't realistically get reward to risk, it was not a trade you should have even been considering. The sooner people start thinking that way, the better. All right, we're in the open right now. Still, all right, we break out into the open if it keeps marching higher. Remember, 54.95. Other than that, your very key support is 54.50. That's what I was wondering. Look at that overhead resistance. Yeah, thanks for explaining. So, that would be a pass. I don't care then what happens because it wasn't my trade. If I can't get proper reward to risk, it's not my trade, and I don't care what happens. Too many people go, oh, it goes, let's say it skyrockets higher. They're going, oh, look at what I missed. No, you didn't. You didn't miss anything. You didn't miss it. It just wasn't a setup for you. That's the component. People will look, oh, geez, I knew that was going to happen. I did this or whatever their setup is. But it's not every setup is a trade. Please remember that. And be very picky. If I'm going to give another thing of advice, wait for the key areas to set up based off the longer term charts, 4 hours, dailies, those key areas, the key projection prices, the key target areas. And then if you're trading shorter term, look for the shorter term setups at those key areas. It might mean some days you have no trades, but the trades, when you get trades, they will be better trades from my experience. Okay? Stop trying to trade every day and start trading when things enter key areas, and then you get a shorter term setup. You will trade much better from my perspective. And the people I've worked with in the past who have adopted that, that's why we do our analysis on the daily charts. For example, and I've said this, my level has not changed. This 54.95, 75, 54, I just call it 54.95, but I needed to close about 54.95.75. And does that mean it's straight to the moon? No. We could get a pause and pull back. But what will I be watching for? I'll be watching for pullback trades then. Okay? In the direction, because the probabilities have shifted. It doesn't mean I go down to the tick chart and every time that it pulls back, I try to buy every little dip. No, I'll watch for key setups at key locations on pullbacks. Have we shifted the probabilities yet? No. Everything's been short term. We're still in bounce mode, not we're going to new highs mode. Could we shift to even today? Yeah. And then when the market shifts, so does my behavior in the setups I watch for. That's all you're doing is watching for setups. And when things change, you better shift with the market. Because also remember, on the longer term, did we close Technically, no. Below the rotation zone. Look, last week we closed back in it. We broke down below it, but remember, what's the most important thing? The closing price. So have we still, since last October's lows when it triggered was percent beat buy, have we closed below the rotation zone on a weekly basis? No. Now, is it getting toppier and toppier? Yes. But could we still follow through and retest the highs? Yes. But it still has to prove itself in the short term. Coco says August is not for trading. Depends. Depends. August is a lighter month, and the volume, which I will point something else. I think I pointed this out the other day. The volume, look, you have this rally. Where is it? You have, look at the volume dropping off. The volume was on the sell side. Does that mean it's I'm still watching to see if this rolls over, but volume's still not picking up this volume. And it is also August, you have a lot of people off, which is Coco has a valid point there. But it doesn't mean there aren't trades, especially longer term. But keep an eye, if you're watching something, keep an eye, because volume at some point, if this is going to really strengthen, now the price could keep marching higher on low volume, which I'll really be watching, especially if we get that double top area for a potential rollover again. However, if volume does not really pick up and start supporting this trend, it's still, even if we close above that 62.5, it's still be cautious, but you trade with the price action and probabilities. All right, let's leave it at that today. Do you believe the market will dramatically react to who's elected president this year? Potentially more so than prior years. But you know what? I think we're in for a world of hurt no matter who's elected. So, and Trump's not going to, if Trump wins, he's not going to miraculously come in and save everything overnight. We're still going to go through pain. Boy, it's getting interesting though with the Kamala thing, with the media. Wow. It's like, can we get some actual, she needs to sit down for an interview. Because she's pretty much hiding. Besides her rally, she's hiding from the press. But they're not going to ask her tough questions anyways. It's like they're already coronating her. Why do we even need an election? So it'll be interesting. I don't, you know what, it's, the things are going to, we're still in the fourth turning. Things are going to get interesting no matter who's elected. This is exceedingly choppy. Well, on what time frame? On the shorter, yeah. Yesterday was a pretty nice trend day. We've had a couple nice trend days, but this I'd be erring on the side. Just again, we're in the potential pause rollover zone with cycles at the top. So would I be super aggressive to the upside at this point? No. We still also remember we have retail sales tomorrow and the unemployment numbers. All right, with that, I hope everyone has a wonderful trading day. Do not overtrade and keep the bigger picture in mind. You just help make us rich so it won't matter. I'm trying to teach you everything I can. I'm trying to actually help people the best I am capable of. But it's for you to learn, not, you know what, I can teach. That's why I don't do signal services. I hate those things anyways. I've done them a couple times, but the people can still screw that up. I'd rather just teach people to fish. Teach people. It takes some time. But like Christoph with the K, You know, he's been working at this for 4 years. He's got a plan to be a millionaire by 30. So as long as he manages his stuff correctly and takes time, then, you know, he could get there. Yeah, on the 1 minute, 5 minute, do not overtrade these shorter term charts. If you're gonna get in on those time frames, wait for key areas. Do not overtrade. And most of the time, I don't bother looking at that unless we're in a strong trend day. Okay? This was a pretty strong trend day. This is not. So do not get caught up. I'm really telling people, do not get caught up on too much of the shorter term stuff. All right, I'm going now. I'll talk to everyone tomorrow for again, unemployment and retail sales. Have a wonderful day. Bye for now.